following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. I hope we're going to have a wonderful day, as always. Every day above ground is always a good day. Now, if you hold on just 1 second here, we got a market that is yelling and screaming. It's yelling and screaming, and it says, "Sell me, sell me, sell me." I'll give it to that. I'll give you that one in a second. We want to wait till it stops going up before we take a look at it. But let's look at the DAX this morning. As you can see, we've been in a pretty tight trading range here for the last couple of days. The break that we had was very similar to the stock market in the United States, the Dow, the S&P, and also the NASDAQ. We went down to the 61% retracement, as you can see on that DAX chart. We also made 1.27 and 1.618 expansions to the downside. And so that tells us that we should have a pretty good rally for here. But as you can see from the DAX, this thing is not rallying very much at all. It can't even make a 382 retracement. So that could be a sign of some more bearish coming. Remember that we have the the lunar eclipse, and full moon is going to be on the 16th. That has a 75% probability of pushing stocks, a minimum of 1.5% lower. That's several hundred points in the Dow. This was from our good friend Norm Winsky. And also, we're going to have Bill Meridian on today at 9:30 from Cycles Research out of Vienna, Austria. He also happens to be a good friend of Alfie Lavoie. And then, of course, Thursday, we're going to have Shane Smolian of wolftrader.net capping off our astrology week. So we'll see what happens. Let's just take a quick look here. We've got a couple markets that are moving down towards targets that should be very, very close. We're breaking below 45 now in the crude oil. And as you can see, this is something we talked about yesterday. We had this really strong move coming down from the 61% retracement that we made, back on the 12th. And as you can see, we're heading down. It looks down to about the 78% level at the 4,400 to 4,390 level in crude oil. That's what it looks like, from this level. Now, the chart that I wanted to show you, now this is not, you have to take the responsibility for this, folks. I am just showing you the pattern. That's all I'm doing. So give me a second here, and we'll take a look at this. And you'll see this is the one I got ready for last night, and we just hit the number just a second ago. So let's just see what we're doing here. And this is the Canadian dollar versus the U.S. dollar. And as you can see, we are completing another ABCD pattern. That's from going back to the 20th of August up into the 1st of September, then the big breakdown into the 6th of September, and then we had a rally right back up to the same area. Now, if you look at this really closely, and this is our test for today, you win a prize if you get this one right. What is this pattern on a longer-term basis if we look at it over the last 4 months? It's one of the most classic patterns that you can get in all of technical analysis. And what is that pattern called? And the first winner of the prize is? Everybody's asleep in the den today. Nobody wants to play along with, no, it's not a rectangle. And RJP is the winner. It is a head and shoulders pattern, and Marshall is a winner because it's a Gartley pattern. You have a Gartley pattern on the shorter pattern, and you have a head and shoulders pattern on the longer pattern. So this is it. Now, the price that we're looking at is 132.04, and it's 132.03, and we're trading at 132.05 right now. The best way to handle this is for the market, let the market come down just a little bit in order to put your stop in. And what I would do is I would say if the market got down to 131.90, and then I would use that as my trigger, for a potential short. Say, hold on a second, I want to put this order in, because you have to dance with the devil once in a while. But I would look at it at 131.90 on a stop sell. That way, you'd be selling a market that is going in the direction that you want it to do. You're not trying to catch a falling knife. And also, the second thing you could do is then your risk would be only 30 pips, and your reward could be 4 or 5 times that much. So that's what I would be watching today if I were doing this, and I am. Okay, let's take a quick look here at the stock market before we get on to the S&P. And really, it's done exactly the same as the DAX. It's just gone sideways. So what I would do is to if you get a nice little rally up here, up around the 2135 area, it looks to me that would be some pretty strong resistance, and any close below 2100 puts the OKOD on that one. So that means we'll be coming down hard into that lunar eclipse and full moon that we have. Now, I have the question that I have to answer today. I choose to answer. I don't have to answer, but I choose to answer it. There's a big difference, as you know, from those of you that are undeplorable. Let's take a review of what astrology really is. I've had 2 requests questioning whether astrology really works or not. It works, but it doesn't work all of the time. If you stop and look at history, you'll see people like W.D. Gann, J.P. Morgan, other people used astrology, quite a bit. Even Wyckoff did, so did Schaubacher. But the shorter term patterns are real easy to see when you look at the lunar patterns and the patterns with Mercury. We've seen this over and over again through the years here at TFNN. But the way I got started to see whether astrology worked or not was my teacher, Dr. Ruth Miller. She showed me that these were related to these Fibonacci cycles that I like to watch. In other words, the spirals that you see in the weather patterns and things like that are the same as the same spirals that we have when we go in the orbits of Jupiter and Saturn and Mercury and all the others. And so the way to prove this was to go back to the major highs and lows in the market, going back to we started our work back in we didn't start in 1875, but the work went back 1875. That was when you first start getting good data coming out of the it was actually the New York Times, and that's when you first start getting stock data on a regular basis that was correct. And then, of course, as we got into the 1890s, the data became more and more important as we got more electronically located with the rest of the world and stuff like that. But so you started looking at when the major bottoms occurred, and what we found is that we would pick a date where the low of the market, like I remember the one we used the most was 1932, 1938, 1974. 1974 was really a big one because we had 2 of them together, one in October and one in December. I'll finish this up in just a minute, and we'll get on with the rest of the trades.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were talking about astrology and how it works. It works part of the time. You know, my guess is it's probably close to 70 or 80% of the time. What you have to do is you have to use patterns and other things that you might like to enter the thing. In fact, you know, I spend 99% of my time, you know, on the patterns and 1% of the time on the astrology because I have friends that are very, very good at this. Norm Winsky, Bill Meridian, Shane Smolian, Arch Crawford. I mean, there's just all kinds of them. They give me a lot of great information that I try to pass on to you folks, and also with the caveat that, you know, we have to be, you know, aware that sometimes these things that don't work, but when they do, you know, they work, you know, rather well. So just keep that in mind. We've got some major things on as far as the technical aspects of the markets happening today. Crude oil happened to be one that I happened to bring up. The Canadian dollar, it was another one that we're looking at. Another one that we need to watch, of course, are the Treasury bonds. They're in big distress, folks. They are anything. We've broken below the 165 level. We're trading a little above that now at 165.14, but we made a low of 164.22 yesterday. This should be a major bottom in the bond market, folks, where we're looking at it right now. It's got a lot of potential to form that bottom, but anything below 164.10, you know, a point from where we are now would tell us that we're most probably, you know, going to be looking at something a whole lot worse. I'm going to put the chart up so you can take a quick look at it, and you'll be able to look at it. Those of you who remember, I posted the seasonal that Larry Williams from down in the Cayman Islands put out way back in July. on getting short the bonds. In fact, we were in agreement that we thought that 177 level was going to be pretty substantial. Of course, it was. It was a major ABCD pattern, and now what we've done is we've come down and we're testing the 78% retracement of the low that we made back in April. And so this is very, very important. And that's why if you look at the right-hand side of this chart here, you'll see that level of, you don't quite see the exact number, but the exact number is 164.22. So anything below 164.10 would tell you that this is most probably getting ready, to go even farther south. You'll notice that 135 pattern that occurred here during August. Each of those rallies was a perfect 78% retracement of the previous swing. In other words, 3 was 78% of 1, and 5 was 78% of 3. And those are just mathematical numbers. They have nothing to do with the astro part of this, and that's why the patterns will bring you to the promised land. The astrology is rather difficult many times. Of course, when it's spot on like it is some of the time, it looks like it's the Holy Grail, and it might be, but not for our trading purposes. We must look at the amount of money that we have to risk when we're putting on these trades on, and not about whether we're going to be right or wrong or how much profit we can make. Remember, winners think how much money I can lose, and losers think how much money I can win. So astrology helps, clear up the picture of what we're looking at. But in order to really profit from it, I think we need to look at the overall patterns, because they repeat over and over again, as Dr. Andrew Lowe from MIT said in his book, the non-random walk down Wall Street, that the patterns are predictable, and on top of that, they repeat over and over again, which we've seen just about every day. In fact, when I do this radio show, I worry that it's going to be boring to you, because it's the same thing every single day. That's pretty much, what you're looking at. So we'll see. Anyway, there is a key level down there at 164.22 in the Treasury bonds. It's very, very important. The other thing is that we're not getting much of a bounce here in gold and silver. We hit some pretty strong resistance, support yesterday, and so I would say that you want to be able to at least get ready for a pretty good move to the upside, and that's not happening in gold and silver. So until they start to move, we're going to have to say that we're still in a downtrend. And looking at the long-term chart in gold, and also we've done this in platinum also, but we'll look at the gold first, because that's the key, because we have gone to that level several times up there at that 1385 level, and now we're trading a good $60 under. Now, that's not a lot in gold. Gold's only down $60 from the high, and that's been, several months ago. So it's actually holding up relatively well. What I'm waiting for is the fact that we have this lunar eclipse and full moon coming in here on the 16th. I don't know if we have a big economic report that day, but that's the day I want to look to buy the gold. I buy it on a dip, where they're, to go down and maybe clear some stops out down around 1309, somewhere in that area. That's where I'd like to be a buyer of gold, and silver maybe around the 1860 level. That's about 20 cents. About 30 cents. 30 cents from where it's trading right now. So that's my strategy. And what I'm doing there is I'm using the short-term cycles, which are, astro cycles. That's the full moon cycle. The new moon's on 14 days, the full moon's on 14 days, so it's 28-day cycle that we're watching. We also have the eclipse at that time, and eclipses are lunar, especially lunar eclipses, because they have more power, coming into these particular ones that we're watching. Okay, this looks pretty good. We're going to have Bill Meridian on here at the break. He's always interesting, and gosh, his predictions have been literally spot on. I've had a lot of requests to have these folks on, and that's why I tried to do it this week, because this is a key week, because we have this lunar eclipse and this full moon. This happens to be, folks, it's known as the Moon Festival cycle in not the Moon Festival in Asia, all across Hong Kong and China from September the 16th on, makes it a really big thing. In fact, they closed for a whole week, I believe, in China for the Moon Festival, and they serve these little moon cakes, which are really delicious. But it's a big time over there, and that's really what you need to be thinking about if you're over there in Hong Kong, is to have some really nice slices of moon cake, which is always very, very delicious. Okay. I've just been informed by the Bloomberg Financial Network that it's only going to be closed for one day in Asia. So that was years ago, I guess, where they closed for a week, but now there's too much money involved. I see that whenever you're in Hong Kong, you look out and you can't miss all of these huge containers that are out there, these high-jan containers. I think that's a correct pronunciation. I'm not even sure of that. But they have gone bankrupt, as you know, and now they're selling their giant, their ocean-going storage containers and their boats, ships. So that's not a good sign from a distribution. We'll be right back with Bill Meridian of Cycles Research.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Bill Meridian from Cycles Research in Vienna, Austria. Bill, are you there?
Hi, Larry.
How are you? I have to give regards
Fine.
to Arch Crawford said to say hi to you, and also
Oh, great.
Alfie Lavoie. You had all Alfie on yesterday, and they both said to
Okay.
say hello to you.
Okay.
Listen, would you like to start out with chart number 1 that you've sent us?
Sure.
By the way, I don't know if you remember this or not, but our viewers here at TFNN certainly do. You hit a trifecta the last time you were on. You were looking for lower gold prices, lower stock prices, and lower oil prices. So our congratulations for that. We
Thanks.
thank you very much. But go ahead and fire away, Bill. You got the show.
Well, what's been working best is the addition of the 1, 4, and the 10-year cycles. Now, the 1-year cycle, I think everyone knows, is the seasonality of the market, that it is strong in the spring. It tends to top out in August. September is the weakest month. June is second weakest. October is the most volatile. October has seen the biggest price drops, but October usually finishes on the upside. And Q4 has generated 60% of all stock market profits. So that's the 1-year cycle. The 4-year cycle is the election year cycle. And the usual wisdom is that the Federal Reserve juices up the economy in the market in the year before the election. So the year prior to the election is strongest, the year of the election second, the year after the election is the weakest, except that, as the late Ian Notley pointed out, this pattern existed before the creation of the Federal Reserve in 1913. And in countries in which they have a 4-year election cycle, 6 years, 8 years, or no elections whatsoever. In other words, there's a 4-year cycle, period. And the 10-year cycle, of course, is the development of Edgar Lawrence Smith, that years ending in 0 have the worst returns, years ending in 7 always have a serious correction or some sort of a commercial crisis, years ending in 5 usually have the best returns, bull markets usually start in years ending in 2. So here you have all three of them plotted for 2016, the 1-year cycle in blue, the 4-year in green, and the 10-year in red. And at the bottom, that green line is the summation of the three. And you can see it a little better if we go down to chart number 2, Larry. That's the green line, but I've blown it up so you can see it, and it's now colored blue. And so this is what told me. Now, June 30th, I got an email from Timer Digest, and they told me I'm ranked number 2 for stock market timing in the prior 12 months. The major reason is what you're looking at. First of all, note that January was down and it bottomed in February, so I caught that top and that low. Then you see this little high here in April. That was exactly April 20th was the high, and April 20th is the exact date of the high of that blue line. So I went bearish about 10 days before that, or a week before that. And then you see the low in late June. And that I caught within a day. I was ready to pounce on that one. And now you see a high here. That's around September 6th, but the actual high was a little earlier in August. Mid-August through September 5th is very thin ice if you're a bull. And you see the low, that is around October 10th to 12th. And then we should get a strong fourth quarter. So,
oh, this is really good. We're going to be able to have you back on sometime in October. What do you think?
Oh, sure. And
okay, great.
So it's that one I take. Now, let me just explain. If we go to the next one, the combination, this is the 1, 4, and the 10-year cycle blown up to show only Q3. That gives you a little better picture of it.
Okay, we've got that one in the room.
Okay.
Go ahead.
Let me just point out, I said I'm going to be speaking again in Boston in October. These dates are listed on my website, billmeridian.com, under speaking engagements. And Florida the third week of January, then Baltimore and Connecticut in February. So the way I speak, I'm speaking on a Friday night to the Boston Investors Group at MIT. It's the third time I'll be at MIT. And I tell them the 1-year cycle, if you ask most stock market participants, do you believe in a seasonal cycle? They'll say yes. And I say, how do you get those dates? Well, from a calendar. How do you generate a calendar? From the relative position of the Earth and the Sun. Once I tell them that, they start looking uncomfortable because I've waltzed them from their side of the floor over to ours. And then I say, well, why shouldn't you use Mars through the signs? I want to show you one of these coming up here, but let's just finish let's finish here. That's the average daily expected return. The next chart, that is the month of all September's 1885 to the present. And take a look at the top. That blue histogram, that is expected return. In other words, it's the odds the market is going up times the change. So if it goes up 60% of the time by 0.2%, then your expected return is 0.12%. Well, just look at all the blue histograms below the zero line coming right up. In fact, September 17 to 24 is the most bearish week in any year. So that's what we're steaming into here. Mm-hmm. So now if you go below that to the next graph, that is an actual, that is from my program JStocks, in which we extract all of the currently relative or currently meaningful cycles out of the market on a daily basis and add them all together. And you can see that also is on a sell. It does not give a buy until October 25th. The other cycle, which has been more reliable, says October 12th. I don't think it's going to be as late as the 25th, the way the market is falling. I would look more toward the 12th, but I just wanted to show you that everything's pointing down, so how can you miss this? So what do you, let's take one more look. If we go to the next graph, the histogram of monthly expected return in 2016, this is a histogram, again, it's of expected return, and it predicted a down January, May was not down, but it got the down June, and it got the weakness in August, and notice that Q4 is very strong. These are only, I think these are election years and years ending in 6, just to make it a little more specific. So on top of that, now let me go back to my example. Why should you use, if you're using the sun and earth as a guide to the seasonal cycle, how about this next graph? This is the planet Jupiter, which takes 12 years to go around the sun, and you see that green line in the middle, that's the zero line. That is where Jupiter enters the sign of Libra, which it will do once every 12 years. So prior to that, the 30 days prior, it was in the previous sign of Virgo. Well, that was generated from all Jupiter transits 1885 to the present. So that's how many years? That's that is about 12. That is about 10 complete or 12 complete Jupiter transits. 1,530. It's not quite 12. It's about 10 or 11. So
Bill,
that
we're going to have to take a break here in a few seconds. But go ahead until the music starts, and then I'll have you back in just a few minutes. Okay, so keep talking.
Well, the red and blue line is the average percentage change the 30 days prior to Jupiter entering Libra, and then the 30 days after. And I have not updated this, otherwise you would have some more price bars to the right of the green line. But note the fit that starts way back in June at the low. Here's the
okay,
music.
Hold on here, and we'll finish up. We'll finish up with this when we come back. Okay, Bill? Be 3 minutes.
Right.
Have to pay some bills. Okay.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, now we have Bill Meridian from Cycles Research on the line here from Vienna, and we're talking about the Jupiter cycle. You want to finish up with that, Bill?
Sure. We were looking at this graph which shows the average effect from 1885 through 2015 as to how the Dow Jones Industrials has behaved as Jupiter approaches Libra, the 30 days before and the 30 days after. That's the blue and red line. I've superimposed it on the current calendar so you can see it. And you'll note how well it followed. You see that acceleration up from the June low, and then the dip, and then the choppy trading, and then this decline into the 0 day, which was last Friday. And now this points to a low. You see what I've done? I've superimposed another planet, which also is pointing to approximately the second week in October. So I start with the solar cycle, and then I add in the 4-year, the 10-year cycle. And now I'm confirming it with this. So if you want to get started in doing this type of work, I recommend you start with the solar cycle and then start adding to it.
Wow. Is this how you got started into astrology, Bill? Because you've been doing this for so long that one of the questions that we had this morning was, how do you know that astrology works? And, I did it by trial and error. You fellows are, really deep into the research of it. But how did you get started doing all this?
Well, I bought my first stock in 1966 when I was 17, and I had bought 2 books on technical analysis, and I was aware of the annual cycle of the year, the seasonality, and I had studied astronomy as a boy. So I said, well, if there's a seasonality associated with the sun and the earth, is there one associated with Mars, Jupiter, or the other planets? And I joined I read Ed Dewey's work, and Ed said, valid stock market cycles are 18.6 and 9.3 years in length, to name 2. And I immediately recognized as being the full cycle and half the cycle of the lunar node going through the zodiac. And so I said, isn't that odd that it matches it almost exactly? And Dewey published an article, I think called Mercury and Stock Prices, in which he said when Mercury is in the 10th sector, now he had to say 10th sector, he wasn't allowed to say Capricorn, because that would have told people, foundation supporters would have flipped. And so when the sun is conjunct Mercury in Capricorn, there's about an 84 to 89% probability that the market will run up into that date, which it will do this December. One of the reasons I'm expecting a strong December. Now, normally that's 70%, but when I'm saying 84 to 89, it depends on what price data you use. I use 1885 up to the present, Dewey was using 1915 to 1971. And so when I saw that, I became very interested.
Wow. That's really cool. Anyway, I know you've done a lot of research and you've been around the world, working for some of the big people doing this astrology stuff. But, the question that they asked me, was hard for me to really, give them an exact answer because I use astrology, as an adjunct to, pattern recognition. But you folks have done a great job with the cycle part, that's for sure. Did you want to go on to the next chart?
Yeah, this is the average daily.
The bond chart.
This is the average daily. Yeah, average daily expected return of the U.S. 10-year note in the month of September only, 82 through 2015. And you see where I have that black arrow. Well, it's really black from the 18th through the 22nd. The bond market has actually been down 82% of the time. So this is what I wanted to throw this in because it's one of the highest seasonalities. I mean, 82% is really something. So what I do is I try to confirm these. In other words, if you have what would be considered bearish astrology for the bonds, or if the bonds are overbought, or if you have the expiration of an Elliott wave or a time count, to use Bob Miner, George Lindsay type counts, if you have those expiring the 17th, 18th, if you have any reason to go short bonds, this tells you that if you use absolutely nothing, you're right 82% of the time.
Wow.
And I've told you that story. June is the weakest month to hold bonds. May is one of the strongest months, followed by June, which is a weak month. And I was with the head of the largest insurance company in all of Austria, and he asked me, in early May, what do you think bonds are going to do? Guess what I said? I said, I'm bearish. 1 year later, I saw him again. He said, what do you think bonds are going to do? They're bearish. He calls me in June. That was terrific. He said, I want a consulting arrangement. Asking anybody if bonds will be bearish right now or in May is like asking people if there'll be sunshine in Abu Dhabi and rain in London. It just happens to be an easy part of the cycle. And to typify it, I saw a show the other night in which an Italian chap got a roulette wheel back in the early days, and he started spinning it, and he figured out after a while that it became warped, and certain numbers came up much more frequently than other numbers, and he won $4 to $6 million before they figured out what he was doing and started recalibrating the wheels. Well, the calendar year is very much like that. There are certain days, for some reason, for certain commodities and stocks, you have a very strong probability one way or the other. All I'm doing is enhancing or building on that by adding in anything I can find.
Well, these are certainly wonderful cycles. You mentioned Edward Dewey from the Foundation for the Study of Cycles. I was fortunate to meet him many, many years ago, and I got to be friends with Gert. I got to meet, I met with Gertrude Shirk quite a bit. She was very helpful to me, to start doing it. But see, I wasn't doing any astrology. I was just doing the nominal cycle stuff, because when he mentioned astrology to me, that was like, oh my God, I got to get out of town. And then, 25 years later, I was looking at it quite heavily. But there's certainly a lot to it. I like that lunar cycle quite a bit, that nodal cycle, 18 years. If you remember, the fellow was Wells Wilder. He came out with that
Yes.
the Delta that was using that
Delta
that
factor,
nodal
yep.
cycle. Sure, I remember that. So anyway, we got about 2 minutes to go. So why don't you finish up? Oh, the big question. We got 10 responses on this. You mentioned that. You mentioned that Hillary Clinton was going to have health problems the last time. I don't know if you remember that, but you did, and everybody in the room remembers everything you say. So you're spot on. You want to expand on this a little bit, or what you think is going to be happening?
Let me just say to everybody out there who knows about astrology, use the 8 p.m. time for her birth. There are a lot of people using different times. I've been following her for how many years? 20, 30? And that's the chart that I used, 8 p.m. It's not 8 a.m. And September looks terrible for her. And as at the end of September, Trump's chart starts to look worse, and her chart starts to look better. And I have thought for some time that Trump would win because it hooks into that very long-term industrial cycle that I sent to you, the business activity index.
Sure. Mm-hmm.
I have it turning up in late 2017. I'm saying, well, that would have to coincide with the election of somebody who's friendly to business. And of course, Trump wasn't even on the scene at that time. But Hillary wants to raise taxes on everybody to pay for tons of stuff, which they're going to give us, and which makes no sense. But can I just mention that my website is billmeridian.com. The monthly newsletter is Cycles Research, Early Warning Service, and a lot of these tools are becoming available at astroapp.com. That's Gene Vicutan, astroapp.com. And we have a finance module in there. And the reason it's on my mind is I just recorded the first instructional video. And also, I've been bringing back a lot of the work of Charles Jane. Do you know he started a sophisticated astrology journal in 1958?
Wow. Bill, we've got, I know, great. We got a break here.
You can get them at my website.
No, stay with us. You got a couple more minutes. Give us a couple more minutes. We'll be right back.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research. And Bill, you mentioned a video that you were working on. Can you tell us a little bit more about that? We've only got a couple minutes here, so if you could give us some more information. Uh-oh, looks like we've lost contact. Uh-oh, maybe out into the cosmos again. Okay. I never said that. Okay, no, it's been great to have him on. Folks, if you're interested in the corn market, take a look at the corn market. We are at really important spot here in corn. We'll put the chart up here. We just hit this level that we were talking about yesterday. We have three different ratios coming in here. We've got a 1.27 expansion, a 78% expansion, and also a 50% retracement. It's a 1.27 expansion, a 786 retracement, and a 50% retracement, all coming in here at this 327 level. I wouldn't risk more than 3 cents in this, because if these three ratios fail, we're going down big time. So just be careful with it, but that's what I would be watching if we were looking at that. So we'll see that we get. I wish we hadn't gotten knocked off with Bill, but it's Bill Meridian at cyclesresearch.com. If you go in and take a look at it, we enjoy having him on. He really gives some really great information and some wonderful cycle stuff that we see, as all of our guests do, and each of them offer, a little bit different things to look at. Remember, if we get below 2,100 again in this S&P, that is going to be a very, 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 very negative sign for all the reasons that Bill Meridian just talked about, along with the fact that the patterns are, heading down, and that's another important thing. Someone's asked a question: would I buy crude oil down there at the 43.50 level? I will, if it doesn't have any, really wide-ranging bars. That's what I would be, watching most closely. But remember, the statistics show that we have a market that could move down quite a bit into October. Those are the statistics. So 877-927-6648. Thank you for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.